Our next guest believes the European debt crisis will hit the U.S. hard. Gary Shilling is president of Gary Shilling. He is an investment guru who was recently noted by Bloomberg Businessweek for nailing all 13 of his investment guidelines in 2008. Nice job, Gary. Most of which involved shorting banks and housing stocks. That is actually very impressive. And I read the Businessweek article last week, and I remember being impressed even then. Also, there are too many accolades for us to list, but let's just say you've gotten it right, especially in the last couple of years here. What makes you think the European debt crisis is going to hit us so hard? Because everything we've heard from the Fed guys, Jim Bullard has come out and talked about it. Everything we've heard from a lot of big investors on this show have been that directly we won't have an impact, and they're not too concerned about things, coming over the Atlantic and hitting us hard.
Well, there are a couple of things. First of all, 48% of U.S. Bank global exposure is in the Eurozone plus the U.K., and that's about $1.5 trillion.
And you're not talking about just overseas exposure. All exposure of U.S. Bank, 48% of that is to euro and pound assets.
And there is a good likelihood that at least some of these countries, Greece and probably Spain, are going to have to restructure their debts. In the case of Greece, it's mainly the government, the sovereign debt. In the case of Spain, it's private debt related to the real estate boom they had there earlier, which is deflating. There's another issue here, too, going on. In Europe, there's a lot of pressure to reduce their deficits in relation to GDP. Now, that's a damned if you do, damned if you don't, because if they cut spending and increase taxes, then that will depress the economies, and they may not get any deficit reduction, and certainly not in relation to GDP, which would probably decline. If they do nothing, the sovereigns could get downgraded. And by the way, there's a big distinction between those countries and the U.S. We're the best of the bad lot. There's a rush for the dollar and for treasuries, and that means we can go on our profligate ways a lot longer than the rest of the world.
All right, so then the U.S. is not immune, correct, Gary?
Not immune in the long run, but until there is some alternative to the dollar. Now, maybe that's going to be the one in, 10, 20 years if the Chinese decide that they want it to be an international currency. Right now, they want to control it if they want it to be freely convertible, all that. That's way down the road. But right now, there's really no alternative to the dollar.
By the way,
the euro is gone as a reserve currency, at least for now.
You have some concerns about China putting the brakes on as well. Just because of the timing, you say maybe it's a coincidence, but it's not necessarily a great sign.
Well, that's right. I mean, China is a stop-go economy. And, they can run it. It's run top down. I mean, for example, they want to build a road. They don't have to get an EPA impact statement. They just turn loose the bulldozers, and if you're in the way, you're part of the pavement. Very different than in this country. Last year, they really put on the gas. $585 billion of stimulus. That would be $1.7 billion if their economy were our size. It was a lot of money. Economy took off. A lot of borrowing through the provincial governments, off-balance sheet ways of financing infrastructure and so on. Now they're trying to slow it down. Of their growth last year, 8.9%, 8.0 of it was through construction, and they're trying to slow that down, overheated property market. So it's a stop.
Isn't that a good thing? Isn't that what we want to see China doing?
Well, you do in the long run, Carol, but it's a stop-go kind of thing, and there's a lot of gyrations. When you got a stock market that goes up and down 50% with regularity, I mean, hey, that's you can lose a lot of money in the short run and getting to the long run. So and of course, China has been the big absorber of the world's commodities. I mean, Australia right now is a Chinese colony. They're basically digging up the island continent and shipping it off in iron ore and copper ore and so on. And as a matter of fact, we're short the Australian dollar, which is a way of basically shorting China, because China's very tough. They control what outsiders can do.
Let me ask you about being short things and being a doomsayer and having a reputation for that.
A realist, Matt, a realist.
Well, you know what? The Businessweek story, which talks about a lot of you guys who have been bearish for a long time, kind of paints the picture that even a broken clock is right twice a day. I mean, what do you say to people who say, hey, Gary, you're always bearish, you're always calling for deflation, and that's why you just happen to sort of hit the jackpot during this crisis? Well,
you can say the optimists are a stop clock, too, that they hit it when things are on the upside. But what I'm trying to do is to call people's attention to the hidden flaws. I mean, people are naturally optimistic, and particularly Americans, and that's a good thing. But the point is that where can you add value? Rehashing the consensus saying tomorrow's going to be like today, only better, doesn't add any value. But where you can add value is to find things that are important, that are likely to happen, and are not discounted by the popular consensus. And that's what I concentrate on. And sometimes they're good, sometimes they're bad. I mean, my call on the dollar's strength and against the euro, against sterling and the Aussie dollar hey, that's very bullish on the buck. Now, you may say, well, it's bearish on the other currencies because it's a two-way trade. But you're looking for the hidden flaw either way.
Listen, so then bottom line, what is the worst case scenario, Gary, in your view for the U.S.?
Well, the worst case scenario right now is that the European crisis turns into a sovereign debt crisis, plus in the case of Spain, the private sector debt, and that spreads via the financial structure. I don't think it's that much a problem with the trade issues, although we're going to attack that in our monthly Insight newsletter in July. But I think it's mainly a financial problem, not a trade problem.
All right, so there's a tease for Gary's newsletter. If you're a subscriber, you also get some honey. Hopefully the bees are okay this year. Gary Shilling, thanks so much for joining us. Always a pleasure to have you on.